Hey guys, welcome to my latest video where I show you some of the stocks that I'm actually buying. So right now I want to talk about a stock called Roku. So what is Roku? Roku is a streaming device that you can use to connect to your TV. It turns any TV into a smart TV. With a lot of smart TVs, they actually have the Roku built into it. Now what does this let you do? Well, it lets you stream all your favorite content. So Netflix, Disney Plus, Amazon Prime, NBA app, NFL app. Basically any type of app that you would watch, you could watch on your smartphone or your television, you can stream through Roku. So actually, I'm looking at my Robinhood portfolio now. Now I actually have, depending on my investment strategy, so I really like Fidelity for things like retirement. I've had a Fidelity account for a very, very long time. But I also use I also use Robinhood. I use it to buy stocks that I kind of have just recently got into. So I have I own 5 shares of Roku in this Robinhood account, about $700 in stock. I bought in shares, so now my average cost is $130. So what I want to do is, guys, I'm not really into technical analysis so much. I really want to talk about the nuts and bolts of the company. So once again, let's go to that Q3 quarterly report. So one of the things is, guys, if you really want to really understand the businesses that you're investing in, remember these stocks, yeah, they have tickers and they trade, but they're actually companies run by people. So sometimes it's easy to forget that with all the hype going on Wall Street and all the articles floating around. And one of the things that is not really popular but works really well is just simply reading the quarterly and annual reports. So what I like to do is I like to just see when they're going to do their quarterly conference call, and then I like to really read that report. So I want to show you the latest report for Roku, and it has some pretty awesome numbers here. So Roku total revenue $260 million, up 50% year over year. Platform revenue $179 million. Active accounts. This is one of the numbers I really look at. Not just the total accounts. Active accounts. 32 million active accounts. I am one of those people. I use Roku every day. I use it mostly for watching. I'm a pretty big sports fan, and I like Netflix as well. So I basically am watching Netflix, YouTube, and NBA app, and NFL as well. And sometimes I'll use some of the other apps and things like that. But the bulk of my watching is basically Netflix and NBA. So streaming hours. Now this is another key thing. Streaming hours over last quarter to 10 billion. 10 billion streaming hours on their platform. Average revenue per user, another key metric that these companies, these big tech companies, are kind of using to gauge how well they're doing. The average user makes them $22. That's up 30% year over year. Gross profit up 50% year over year. Guys, these numbers are insane. Insane numbers from a relatively, I would say, smallish, obscure company that is quietly leading. They're beating out Apple. They're beating out Amazon. So they have more market share than the Fire Stick. They have more market share than Apple's TV, things like that. This company is a really special company, and one of the reasons why I really like Roku is simply because it really checks off a lot of the boxes. So number one, it's super easy to spell and remember. It's something that even people in other countries can easily pronounce and easily remember. One of the problems with some American companies is that the way they're named, it just kind of makes it harder for people overseas to really get involved, because the name maybe sounds just a little bit like too American, you know what I'm saying, or something like that. Roku is actually a Japanese name, so the name is very catchy, easy to remember, easy to spell. It passes all the radio tests, everything like that, and it's a really useful platform. So I love my Roku. I use it every day, but I want to dig down to some of more of these numbers that I want to show. So one of the numbers that I really like to look at is a lot of these companies aren't going to make money right now. Investing in these type of tech companies, this is a long-term thing. So number one thing I'm looking at is revenue. Are you making money or are you not making money? So as we can see, we can look at total revenue. Total revenue in Q3 2019, 260 million. You see, 260 million, and in Q3 2018, 173 million. So obviously these numbers aren't going to always go up quarter to quarter. That's what we would like to see, but that's just unrealistic sometimes. But what I like to see is that a general uptrend. And as we can see, back in 2018 it was 173 million, and the last 4 quarters have all eclipsed total revenue of over 200 million. So that's just excellent. And another very, very important statistic. So number one thing I'm looking at is revenue. Are you bringing money in? So the second thing I'm looking at is average revenue per user. And as we can see, quarter after quarter, $17.34, $17.95, $19.06, $21.06, $22. So we've been uptrending on average revenue brought in as you can see, as the accounts continue to grow, streaming hours grow, revenue continues to grow. So this is excellent. And the thing that I like is that they're increasing the number of accounts, but they're also increasing the revenue. Sometimes what you'll see is the accounts will skyrocket, but revenue won't skyrocket. So that means that not only are they getting more users, but people are engaged. Guys, this is an excellent opportunity for this stock. So now I want to show you guys a little bit more. One thing I like about Roku is that they're really transparent with what they're doing. So they said, according to eMarketer, 56 million households will have canceled cable or satellite TV subscriptions by 2023. So what they call this is they call this cord cutting. They said our own research indicates 50% of U.S. cord cutters are Roku customers. I'm one of them. I used to be a huge on cable. For me, it was usually Comcast, and then I realized that streaming is the future. And one of the things that I've really tried to embrace in 2019, moving forward with my investing, is you have to change with the times. I know it's hard. You know, we're so used to cable subscriptions, and to us, you know, just streaming seems crazy. But if you think about it, let's say your favorite movie comes on at 10 o'clock. You want to see, I don't know, any movie. It could be, you know, Frozen 2 or something like that. Why would you wait until 10 o'clock for it to come on? Well, you could just watch it instantly. Like, this is the microwave generation. So for me, that really made a change for me. And that encouraged me to really invest in Disney. I also own Disney stock, but usually invest in Roku too, because I don't think we're there yet. I think people are a little bit reluctant, but everyone is into Netflix. I also am a Netflix shareholder as well, and I'm going to talk about them in a future video, why I like them long term. But the fact is that this is another transitional company similar to Roku, similar to Tesla, where we're in the early stages of kind of like that pushback, but you can see the people that are moving forward with the times are using the products. So basically, another thing I like about this is that a lot of these Rokus are actually built into the televisions. So you can actually buy the thing separately, and then they also have the thing built into the TV. So it says we continue to lead the smart TV OS licensing as #1 licensed TV operating system in America. So that's just excellent. So not only do they have the standstill player, but they have the players built into the television. And guys, this thing is really strongly positioned to do well long term, because, for instance, you've got Netflix, Disney, and Apple. They're all competing with viewers. Well, Roku doesn't do that. What Roku does, they step back and say, hey, you can use my platform and watch anything. You can watch Disney Plus, Netflix, and Apple on my OS, on my device. That's just a game changer, because now they're not fighting for that same market. They're just will stream anything that you want to watch on your smart TV. They will stream. So this is just excellent. And then I also want to talk about their competitive advantage. This is really important as well. As you can see, the key advantages that set us apart in the U.S. are expected to play an important role in new markets. Our purpose-built OS, OEM partnerships, and free TV capabilities, many factors we expect to contribute to our ability to attract content providers and consumers and quickly build and scale new markets. So basically, Roku is expanding internationally. They just brought Roku TV to Europe, as you can see in the Q3, and they're just expanding. You know, a lot of the growth is going to come overseas, and streaming is really big. You know, I've traveled to a couple places. I've been to South America, I've been to Asia, Europe, and streaming is just as big there as it is in the United States. And most of these companies, they're going to have most of their growth is going to come from overseas in the future. So these are just some of the excellent things that I really like about Roku. And I believe, you know, Andy Wood, the CEO, founder of Roku, he's done an absolute amazing job. I mean, seriously, how is he leading market share over Apple and Amazon and Google? I mean, that's just insanity, right? I mean, the market cap of those companies are all well into the trillions, and Roku's sitting at around 17 billion as of recording this video, yet they're leading all three of them. So that's just insane. I want to show you guys a quick chart that explains what I'm talking about in terms of the market share. Okay, so I kept referring to how they're dominating market share. I just wanted to quickly refer you guys to this Engadget article so you can kind of visualize what's going on here. So Roku continues to dominate TV streaming in the US. Take a look at this graph. Here's the graph. Now Roku is somehow beating out Google, Amazon, and Apple. And the market share growth in the use of Roku is while everyone else is kind of, you know, a nice uptrend because that's where everybody's moving, Roku's growth is exponential. So this is just unbelievable how this smallish company, not small company, but in comparison to Apple, Google, and Amazon, and Microsoft, very small, right? In terms of market cap, so small. Yet they are crushing them because the people are loyal to the product, like myself, very loyal to the product. I use the product every day, and I don't think anything could make me get rid of my Roku. I mean, it's like becoming part of the family, you know. Sometimes when I can't find, I even kind of like personified it. Sometimes when I can't find a remote, I'm like, where's Roku? So this is one of the companies that I like to invest in things that I use myself, and this is a stock where we're seeing a lot of volatility in this stock. So I want to quickly go back to Robinhood and show you guys. So yeah, so I want to just show you guys a quick 1-year chart. So we've seen a lot of volatility in this stock. Now, one of the ways to play this stock is to simply trade the options. If you're not interested in like buying right now because you're afraid of the volatility, you can trade options. But the 1 year, if you take a look at the 1-year chart, we were down at $35 in December 13th. And now we're up at 145. So this is in less than a year. But we're still only at a 17 billion market cap. So how much room does Roku have left to run? Well, I think a lot, because as we saw in the as I want to go back to in the Q3 report, we're seeing a constant uptrend in active accounts. We're seeing a constant uptrend in streaming hours and a constant uptrend in ARPU. The CEO, Anthony Wood, is doing a fantastic job. Numbers are continuing to increase, and I plan to hold my shares of Roku for a long time. So what I would say about this company is, this to me is a unique opportunity for investors, because we don't see companies come off, like a company like this. I don't see it coming around, you know, all that often. And for it to out market share the likes of Google, Apple, and Amazon, it's just crazy to me. But I know it myself because I use it every day. It's an awesome product. It works very, very well. And I love the fact that it's something physical you can hold into your hands. You know, so many people are obsessed with Disney Plus and Netflix, and I own Netflix shares. But one of my pet peeves about Netflix is that you can't physically hold it. You know, it's not physically in your hand. But with Roku, it's the remote. You can even turn your cell phone into a Roku remote. But I like the fact about Roku that's physically in my hand. I can touch it. I can feel it. You know, I can see that Roku logo on my remote every day. It's become a part of my family. And these are the type of companies that, if you look closely, do really, really well in the long term. Prime example is Apple. When someone buys an Apple phone or they buy a computer, something like that, it really becomes like a part of their family. It becomes something that they hold on to. They constantly are going to get the new version. They become loyal to that product. And what I think about Roku is that I have the same feeling. When Roku updates and comes out with a new version, I'm just going to simply, you know, update my player. Or, you know, if you wanted to buy a smart TV, you've already got the software built into the TV. So they just make it so easy for you, and the product's excellent. I really love the share. So right now, for me, I'm just basically buying on dips. So I just want to take a quick look at the chart and show you guys some of the buying opportunities that I saw. So with this, the volatility on this stock is freaking crazy. You can I've been buying on dips. So like right here, it was up at 160, and then when it dipped down to 133, I bought back in. So we've just been seeing some crazy volatility, but for this I would just buy. I'm going to continue to buy on dips. I only have 5 shares right now. My goal is to, I want to build up, I would love to build up a 100 share stake, but I'm also invested in some other things, and then I have some other kind of slower growing companies in my retirement account. But my goal is to get as many shares of Roku as possible. I own the majority of my shares in my Robinhood account of Roku, so I really like this stock, guys. I'm very bullish on it. And let me know what you guys think about Roku, if you own shares or you don't. If you think it's got too much competition coming from Google and Amazon, or you think it's just going to stay on top. So let me know what you think. And until next time, guys, take care.